cost that a business will incur to service the loan that it has taken. Okay, so if a business has borrowed money, okay, then interest expense becomes an important point. Okay, and that's why, while analyzing a statement or understanding a statement, interest expense is a very important point to be looked at. Okay, because if you are a company which has heavily borrowed and has got a huge amount of interest expense, it will make an impact on the profitability of the company. Another important point to be noted is that increase in the interest expense for a company or its inability to service interest as a cost is the starting point of stress for a business. When a business reaches the point of stress, it is not able to service the interest cost, which means its profitability is not good enough to take care of interest expense, which is an outgo for a company. So the stress of a business gets monitored from interest expense also. There are parameters like interest coverage ratio, debt service coverage ratio, which give an idea about how much interest expense a company has to incur, and what percentage it is of the total profit before interest and tax that it is making. Okay, so basically when we try to evaluate the consolidated statement of profit and loss, what we are looking at is we are looking at various components of a P&L account: your turnover, your top line, your interest expense, your non-cash expense, which is depreciation. If a company is profitable, then what will happen is that more dividends will come, and dividend is a periodic cash flow. Some companies pay very good dividends and shareholders keep on getting money, plus the share price appreciation also happens. There are two ways to measure the profitability. One is called as the margins. Very important. People will often use the word profit margins, EBITDA margins, EBIT margins and all that. So ability to transform money from sales into profits is called as the margin. So if you sell something of 100 rupees and you get 20 rupees profit, your margin is 20%. That is what is the concept of margin in layman's terms and even technical terms. And ability of a company to generate returns for its fund providers. That's why, if you are a fund provider, the company must generate enough money. We saw the interest coverage ratio also. So if you are making profits, then only you will be able to pay interest to the fund providers. Okay. What are the profitability ratios? So we often use the concept of ROE, return on equity, return on assets, return on capital employed. So these are the three return words that typically come. Okay. And we also have profit margins. Okay. So profit margins, what does it mean? Okay. And what are the other terms mean? Let me
hello everyone. The others have received it as well. I can see Ankita has received it. Tally has received it. Anybody else who's not received the file yet?
So some of the people have received the file?
Yes, sir. I think most of them have received it. So I think we can start. Anybody who's not received it, please paste it on the chat. We'll make sure you receive the file. I think all of them have.
Oh, you got it. So I want you all to just try these a couple of questions that I've given you over here. See, there are 7 questions. Like in the first question, it says, right, count how many people who have scored more than 70. Right? Then you have the next question, likewise over here, write a formula to score. Right? You have to give the grades on the basis of the marks that they have scored. Right? And likewise, you have a couple of formulas in the questions in this. So can you all take 5 minutes and work on this? And as you are doing the answers, you can please share them over the chat also, and please share in the personal chat. Right? You can share all your answers. Like for the question 1, you can say question 1. This is the formula that you have written over the personal chat.